Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 8th. My name's Eric Wilkinson. Yeah, you might recognize me as the Wolfman from mainstream media, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. It feels like I got a hat on, but I don't. Yes, this is probably the one and only time you guys are going to have the opportunity to see the man bun getting a haircut today, and probably won't see it unless I lose another bet. All right, so let's move on to the overall economic data. We've got across the pond nothing really going on, but then we move over here to the United States and we've got unemployment claims, not really the major number we're looking for. That comes out at the first Friday of the month, which happened last week, but we can go over it anyway. It's claims came in at 209,000, expected to be 215,000. Why is this number important? Well, it's important because if less people are claiming for unemployment, it's assumed we are nearer to full employment. Less people looking for jobs is a good thing, because then it's assumed that they're hired. All right, so final wholesale inventories coming in at unch, which is a good thing because it was expected to be a 0.2% increase. Now we want to see inventories moving down only if they are moving down because they haven't slowed down on production or anything else. It just means that there is demand outpacing the supply, which is good. We don't want to see those supplies going down, not due to higher demand, maybe even a lack of demand, or they foresee a lack of demand and therefore start slowing down production on stuff. So we don't want to see that. And then we haven't gotten natural gas storages quite yet, but we should probably get it by the end of the webinar. So I'll try and, or this daily market commentary, I mean. Actually, here we go. We got it. Came in at 55 billion cubic feet, expected to be a drawdown of 60, or supposed to be 61 billion cubic feet. It actually came in 55 billion cubic feet, which was more of a 6 billion cubic feet drawdown in natural gas storages. I guess this is on too tight and it's zapping my brain power, or what I had of brain power. All right, let's talk about the overall markets. We've got crude oil moving a little bit higher today by a couple of bucks, but at the end of the day, we're right back at that point of control, right in and around that $52.50 that we've been talking about. We usually expect when we see the markets come to these points where we're talking about, in particular, the point of control, which is where the most time and volume has been spent. You can see right there, there's two separate little lines. Well, when we get in and around this little area right here, the markets have a tendency to settle down because we have all exchanged prices at these levels, and usually when we see extremes, you know, this is a point where if you were long, you would be thinking you needed to get out, and if you were short, you would be panicking to look to get out because everybody got in, let's say, down here. And then the market comes back down, everybody is complacent. Nobody does anything here. I've already gotten short there, you've already gotten long there, and we're right back at where we started. There is no angst. Angst to cover, angst to get out of a winning trade or a losing trade, all right? It's complacency when we get around that point of control is how that all works out. Why I look at it, yes. And then we've got gold futures. They really were looking like they wanted to go to the 1600 level. All of this being said, we've got China talking about, or actually coming through with devaluing their dollar, pinning it, or devaluing their currency and pinning it. That is going to cause most other people to start thinking about the same thing. We don't want theirs to be devalued more than us. It makes their products look more attractive to us is what they're trying to do. They've got these tariffs where we see the prices of their products going up due to the tariffs. Well, they send their prices down by lowering their value of their currency, and that makes it more attractive to us. So they're trying to offset what these tariffs are doing to them in the economy. Well, when that happens and the rest of the economies start to debase their currency, their fiat currency, well, that drives other things up, like a flight to safety in something like gold. So we could see 1600 if all of this stuff really starts juking around. I'm thinking that's a little bit out of the realm right now, but never say never. All right, we've got bonds after yesterday's big move. You know, a lot of times we've talked about this in the past where you get these couple of dojis lining up, where if you got a top doji like this, you know, say for instance, what we've got set up over here is what I'm kind of building at. So we've got a move higher, and then you get this doji that kind of shoots out and above everything else, right? Well, that usually signals as a top, and we would expect maybe if you see something like that, well, that is a confirmation of a top there. We haven't seen that necessarily right now. What we're seeing is that we've got another doji that does something like this. And my dojis are terrible, I agree. But we get something like that. That usually means it's a continuing pattern to the upside, and would expect to see something coming in like that on the following day. Well, we didn't get that. We've gotten something that looks a little bit different than all of this, and we've gotten what looks to be a confirmation of a top here by the market basically building like that. To me, that looks like we are looking like we're starting to roll over. Now, I don't think that it's a major top here. We might actually come down and test this area here, but I do expect us to start moving back down a little bit anyway, at least to the 157 handle is where I'm expecting us to go to. And I put on a trade based on that, so we'll talk about that here in a minute. VIX coming off dramatically. We've talked about this in the daily market commentaries. You see the market spike up quickly. We get massive spikes higher. Well, we see volatility usually come out as quickly as it came in, as you can see here in the past, right? We've gotten these spikes. You spike up, you spike back down, and that's how VIX has a tendency to work. And that's why I talk about it so often, is you only have few opportunities to get into these things and take advantage of those high implied volatility markets, and then we capitalize on them when we see that volatility come out rather quickly, is what we're trying to do right now, actually. With the Nasdaq moving higher by about 128 points, I think it's the one that's leading the charge here so far, up, you know, over a 1.5% on the day. But again, we've talked about this, that the market is close to that point of control, and it is going to act like a magnet right here for the market. So we're going to see something like this with a little bad magnet there. So that's going to be pulling us back down as the market starts to rally. I think that the economy is doing rather well, and it would have been an opportunity to get in if you have a portfolio of stocks. This is the time to be selling puts and thinking about adding to that portfolio, because the puts, if they expire worthless, then you get to lower your cost basis on whatever that stock is. If the puts get hit, well, you're dollar cost averaging, and it's a great strategy, especially for long bull runs like we've been seeing. And then we move over to the E-mini S&Ps on the daily chart. You can see overnight inventory pretty flat, but coming into the day, the bulls started coming out. Everybody's realizing the economic data here in the United States isn't all that bad. Yes, we do have some problems over across the pond, but at the end of the day, in the United States, which is what we're really concerned about for these stock markets, is the United States. All right, we've got the markets that I've traded today. I'm looking to get out of that IBM. I'll talk about that a little bit later. But with SPY, I've talked about this. I'm playing this to the upside. I think that the market's overdone to the downside. And if we sit here right in and around this point of control, then we will see our premiums get zapped from the we'll get zapped from the theta decay and everything else, volatility coming out. You can see it's already starting to come out here, which is what I want for this strategy. Implied volatility percent above 30, which SPY was in that range before I got out of it. And I went into the September, sold the 270 puts in there for $2.01. That means that my 270 puts are lining up way down here, so I get below this area. That would be the signal, because we talked about, remember, we have higher highs and higher lows continuing on. Well, maybe it's more of a move like that, higher highs and higher lows, to be quite honest, is how I drew it up yesterday. we break below this area, that's where I'm going to be looking to get out my 270 puts. In this September, I did the 270 puts for $2.01. That means my break even is going to be at 267.99 really. So that puts me well below these areas here. So I'm down below that little support area, and I'm going to be out as soon as we break below 275. So if SPY is less than 275, I'm going to be out of this trade, okay, no matter what. SPY goes below 275, $275, then I'm going to be out of that trade there. All right. Then we move over to TLT. TLT also, if I'm playing SPY to the upside, I'm going to be playing TLT to the downside. I think we've gotten a little overdone to the upside, at least for the near term. So in TLT, I'm looking for it to come down and maybe even cover some of these gaps down here. And so I went in and sold the September, which is right around 45 days to expiration, right in that wheelhouse of when we set up these premium selling strategies. I talk about that in the webinar. I'll talk about it again in today's webinar, so you better check it out, especially if you're expecting, we've had this big move. Well, we might see the snapback just like we saw with the VIX. So, it could work out very well. I went into September, sold the 146 calls in there for 58 cents. So that puts me well above where we are now. And with my expectation of the market coming down, we've got, pretty historical highs here in the VIX. That's premium selling. All of those things working in and around my rules to set that up, and looking to play these markets as a bit of a correction going on for the next few days. Also, finally, I'm trying to get out of the IBM. I don't think I'm going to be able to get out of this today, because I need about another probably $1.50 move higher or something like that before I'm at 50% of my max profit on this. But I'll just talk about it real quick. September, I sold the 125 puts in there for I think it was originally the 125 puts I sold for $1.21. So I'm trying to get out for right now 55 cents. It's a little bit better than 50% of my max profit. It's trading around 75 cents. So, I need at least another dollar move higher in order for me to probably get the hit on those puts that I put on for a bullish move there, or to settle down in and around the point of control. Again, I set it up because I was looking at this doji coming back down, or all these markets coming back down to the point of control, and it would look like we were going to settle down there, which is what usually happens around the points of control. So we'll play that one out. We're real close to getting hit, and that's about it. That's all I've got for you, other than today's webinar is going to be on the short put butterfly. Now, the one that we did for the short call butterfly in JP Morgan worked out great. So anytime we get into these areas where we start seeing the market settle down, or we just expect a big move, we don't know if it's up or down, we just know that there's a big move coming, we might snap out of this little range or something. Well, that's the time to set these up, and I'm going to talk about all of those rules that you need to follow in order to be successful with this strategy, because it is one of the lower probability strategies. But when you set it up in the right circumstances, you can increase that those chances for yourself. All right, if you can't take that, take it easy.